All right. Hello, everybody. We are officially live. It is time to talk about the stock market. Let me tweet this right now that I'm live. Live stock market open. It is Monday, August 15th. It is actually my grandmother's birthday. So that's awesome. Shout out to my grandmother. I'm so happy she's she's still here with us. She's in India right now, actually. Let's go, Bacon Bombs. Bacon, can you tweet this in the Discord, please, Bacon? Or not tweet this, but send this to the Discord. Happy birthday, Grandma. Appreciate you. Yeah, let everybody know so Gabe doesn't kill me. Drew, what's up? Back to the market opens as our regular schedule. I know the last 2 weeks have been a little bit hectic, but the following weeks, except for Friday this week, should be back to normal. And you guys will probably like the reason for why. Also, late night stock talks are going to be back starting today. So for those who are interested in that, I hope you guys join. It is going to be a fun time. Yo, Mitchell Quicks, what's up? Thank you all for being here. This rally is incredibly interesting, even because it's not a rally anymore. Now it is a, I guess what you would call bear market rally. I don't know. S&P 424 right now, down about 0.62%. The fact that the S&P is even hitting the levels that we're at right now at 430 to me is absolutely incredible. I'm about to take profits again. Yeah, I can't blame you, P. Morton. I absolutely cannot blame you if you're about to take profits again. S&P at 427 is a bit ridiculous. We were just at 360 in June, right? So for it to catapult from where it was, I mean, look at the S&P. It was at 476 in what is it, January, and now it's almost like the bear market. It's almost like this thing didn't even happen. It just goes from here to here. It's like it's not even that big of a decline. And so I think this is informing a lot of, the things that I feel around this market, which is that it doesn't feel as real as it should feel, but I could also be wrong on this. And I think we're going to have to see overall. QQQ at 330. QQQ was at 268 at its lowest point. So things were not necessarily the best. Hold on. Let me pull up Webull again so you guys can see it. And so that's also very interesting. Chris Patel, nah, bro. Empire State Manufacturing missed like crazy. Market going to start factoring the Fed rate pivot. That is a good point. I actually didn't look up Empire State Manufacturing. I'm going to look them up right now. I know that we get Walmart, Target, and Home Depot earnings today. So we are going to be able to see what happens from there. Good morning, DRK. Good morning. This is just a bull market crash. Oh, man. It is absolutely interesting. It is absolutely interesting what is going to happen. Morning Goal, which way is everyone going to overreact today? Yeah, look, I think on the S&P in particular, that's the main index that I focus on. Well, let's see where the NASDAQ is right now. NASDAQ topped out at 16,000, right? We're at 13K. Okay, so you could say, from 16K to 13K, 16K was in November 2021. It's not that crazy of a decline. We were pushing below 10,000 just a couple months ago. And so I have a couple of videos coming out this today. One of those videos is about Cathie Wood feeling that we're already in a recession. If we've already have 2 quarters of negative GDP, theoretically, she is correct that we are already in a recession. And her argument is that next year we're going to be coming out of a recession, which is why it's advantageous for Cathie to be able to say that we are in a recession. Sam, thanks for being here. Appreciate you. So if that's the case, right, and Cathie Wood believes we're in a recession and that we're going to get out of a recession, all the high growth tech names, Roku, Coinbase, Square, all the stuff that she's invested in is going to be benefiting if we're coming out of a recession. Like the amount of euphoria the market's going to have when we come out of a recession is going to be just astronomical, right? Because we're not, I mean, look at what happened after inflation started, basically peaked, and we went down 8.5, like there was a little bit of a rally. So if that continues to happen, inventories continue to increase, insinuating that there's going to be more supply than demand because consumer sentiment is going down because we're not buying as much stuff anymore, which is basically what the last earnings for the big box retailer said. Then that means that there is going to be theoretically a lot more deflation in the economy, which should stop some of the recession. But we are going to see if that actually happens. Nah, dude, Amit isn't a Patel. He's not cheap enough. Chris, I feel like, Chris, didn't you send $50 just randomly because I started a new podcast? A cheap person wouldn't send that. So I don't know if you're absolutely the cheapest of the Indians. But this is a very interesting market that we see ourselves in. Palantir down to 982.91%, so down a percent. Tesla up. Tesla's actually up in the pre-market 906, contrary to the rest of the market that is tending to be down. Pinterest had phenomenal earnings last 2 weeks ago at 443 million monthly active users. They're stuck at around $23, but they rebounded from about 16 back in May, so not bad. Roku's rebounding as well. Roku went down to 65 on earnings that wasn't that amazing, rebounding back into the 90s range. So honestly seemed like a pretty good buying opportunity for Roku if you did buy Roku. Enphase is down a bit, 295. Enphase, absolute winner. I mean, it was at 150 at the peak of the bear market, and it rebounded literally 100% since then, which is not bad at all. Hope the rally is over. These past 2 months have been easy trading. Yeah, for traders, I mean, this has been probably an amazing market. She has constantly been renewing her 5-year time horizon that no one knows when it ends. That is also true about Kathy. I mean, the most surprising thing was when she sold Coinbase at 53, about 1 million shares, and then, Coinbase rallied. Now, she probably didn't know the Coinbase was going to rally, because I don't think you would sell it a week before your position doubles, right? And then you could have sold it at 100 versus at 50. But nonetheless, I mean, that is some of the trading ultimately that goes on when you have an ETF like ARK. ARK Innovation is actually up at 52. So it's down 60% all time. It was down about 80% when it was at 34, 33. And, you can make the argument that things were just oversold at that time. And that's why we're having the rally. I don't deny that argument that things were so oversold, that things were getting so bad that the rally inevitably had to happen. But it's a question of if this is going to be sustainable. Occidental, Warren Buffett now owns about 20% of this company. He is buying even more shares of this and of Apple. Apple, by the way, $10 away or $9 away from being a $3 trillion company. I made a video on Apple becoming a $3 trillion company in January, and I did it 2 days before I wanted to post it. And then the day I wanted to post it, they tanked from like 180 to like 168. And I was like, I can't post this now because the title of the video is Apple's a $3 trillion company. But now it's not the case. Did I miss the bell? No, you did not. We have 2 minutes until the stock market officially opens. If you're new to this channel, thank you 93 people for being here. We have a bell that we ring in the morning for the stock market to be able to open. Amit is in the Shah Mafia. Interesting. Noah said puts on the SPY. Wish me luck. Well, your puts theoretically might be printing right now. We're going to see what happens overall when the market happens. Disney had pretty good earnings. I did a video on them, 220 million subscribers with Hulu and ESPN Plus compared to Netflix at 220.7 million or something like that. Netflix also, I think, is at 250 right now. Netflix is turning into that tradition. Yeah, see, Netflix is turning into that traditional value stock. And it's very interesting because Bill Ackman sold out of all of them, took a $400 million loss. And I don't know, you would think maybe he would continue to keep it going or not. But Netflix is a very interesting stock right now as well. I'm still not bullish on Netflix because their content's gotten a little bit better from what I've seen over the past couple of days, but it's not. Oh, by the way, Jay Schwab, I know you're in this chat. 8 Mile is on Netflix. I watched it a week ago just to get a little bit, inspiration. So I'm just saying that to you because I know you love. What do you love? You love Eminem. So that's why. Apple not pivoting to ads. Yes, we're gonna talk about this. They screwed over Meta, and then they're pivoting into ads. It's absolutely insane. 30 seconds till the stock market opens. Let's see what happens. Apple, man, Tim Cook is a ruthless mother effer, bro. Absolutely ruthless. Screwed over Zucks and then started to take his business. All right, the stock market in the United States is now open. Wake your ass up. No one's home right now with me, so I didn't interrupt anybody. But hopefully I interrupted your morning to wake up. Uber at 32.15. Okay, Uber at 32.15. Apple 171. Netflix 248, down a bit. SPY 424, down about 0.52%, down from the all-time highs as of the past couple months at 427 when we thought it would. All right, I think it got even to 429 actually. It was getting close to 430. Snowflake at 168. Snowflake was at 110 June 30th. So June seemed to be the bottom for a lot of this stuff. Palantir at 990, pretty much the same as pre-market. Twitter at 44. My goodness, this was at 30 38 or 31 at one point. I think the market is starting to feel that this deal is going to happen, and it's going to be quite interesting to see if it does happen. I mean, if it does happen and Elon owns Twitter, that's gonna be something. AMC has been rallying. It's at $24. One could argue that AMC does not deserve to be over like $6 or $7, but granted, the AMC bulls are keeping it alive. They have issued this new dilutive token that they're saying is not diluting, called the Ape Coin. If you're in AMC, let me know. It's very interesting. Definitely, to say the least. Nvidia at 188 right now, not doing too bad as well. SoFi 758. So SoFi, congratulations to the SoFi holders. You guys were stuck at the 4 or 5 range and you broke out of it, up almost 30% into the $8 range. Anthony Noto, Rockstar CEO, continues to buy more and more SoFi. Coinbase at $89. Coinbase rebounded from $50 down from its high of $100 last week. This thing, HKD, that got to $2,500. I hope to goodness no one bought this stock. It's back down to reality at around 192. It IPO'd at $8, so even 192 is like what, 10x gain, more than 10x, 20x gain from there. So probably deserves to not be there. But that's what it is right now. Let's see what we got going on in the comments. So we have some SoFi winners here. NEO is tanking. Let's go to NEO. Let's see NEO right now. Oh, NEO is tanking. $20.95. Okay, so a couple of things I think we have to discuss. Number one, we have to see Walmart earnings, right? It's not out today. It's at 131. Walmart went down, I believe, the most in a quarter, this decline that you're seeing right here, than it did in its entire history of being a company, because they never had the level of excess inventories that they had, or if they did, it was never at the point at which the market would react to it at such a level. So that's going to be coming out this week. Target is going to be coming out this week at 172. Target rebounded nicely from 137, but it did go from 265 to 160. I think like in February when they reported earnings, which was pretty bad, or March. And then we have Home Depot as well that we're going to see is at 312, highs of 415. These are the big box retailers that are going to let us know what is going on in the economy. The disconnect here is that big tech had phenomenal earnings, right? Google, Amazon, Apple, Facebook, they all put up 30, 40, 50, 60, 90, 121 in the case of Amazon, $1 billion in the past 90 days. They did their job from an advertising, commerce, cloud, distribution on a sales front. When you talk about something like Microsoft perspective, they did their job for the economy. The question is now, is the consumer going to be able to do our job in buying from some of the big box retailers and continuing to give them the leverage that they need to see as well? NEO up 77% from the bottom, slightly down 0.2% on the day. That is true. NEO also is down from $60 when it was at the highs in 2020. AMC at 25 is the ultimate signal for me to start selling and taking some profits. You do really well if you did this in March too. Yeah, I mean, and this is the really scary part, right? So if Cathie Wood says we're in a recession and that we're going to get out of the recession in 2023, a lot of economists are saying we're actually going to get into the recession in 2023, which is at odds with the idea of the midterm bounce year, right? After midterm elections, we're supposed to be able to have a bounce. And if we're having a bounce, then that means 2023 should be better, just like 2019 was better compared to 2018. But if we're in a recession right now and we're getting out of the recession in the Cathie lens in 2023, then this is a great time to buy. If we're getting into a recession in 2023 and the S&P is going to top by December at 454, which is the last time the 2-year and 10-year inverted back in April, then maybe this is the time to sell. It's a really difficult thing to kind of figure out what exactly is happening. Tesla at 918. Let's go to Tesla right now. Tesla's up and 918. Tesla's doing well. I mean, Tesla's made its recovery. It was at 600s. It got up to the 900s, and it's doing what it ultimately needs to do. Let me pull up CNBC. Let's see what's going on in that world. And we'll see some different stuff that's happening. China's economy is very interesting as well. A lot of stuff is happening in the China world, and we're going to keep seeing how that goes. I want to play this video by that goes to Chris's point that Apple is considering expanding ads on the iPhone. So let me share that real quick. And we're going to talk a little bit about how Apple's screwing over Zucks and if that's a good thing for Apple.
Welcome back to Squawk Box. A new Bloomberg report says Apple could expand advertising to new areas of your iPhone and iPad. Currently, the company places display ads in its news and stocks apps, but the piece speculates that search ads could appear in the future in Apple's Maps apps, as well as Apple's digital storefronts like books and podcasts. The author says Apple has already explored internally the addition of ads to Apple Maps. What do you guys think?
I don't know if I'd notice it. I see so many ads in the other things that I'm on, the other apps I'm on. Like,
what I think is Google has done the best job, I think, of
keeping clean.
Capturing you in the environment and owning the ads that you see.
Yeah.
Apple, for the ownership that it has of your space, doesn't really seem to capitalize or monetize it.
Well,
that
it gets
way.
tricky
They
because
don't invade your privacy quite as much.
Exactly.
That's it.
Because that's
That's
their
it.
brand in part too,
Right.
is that we're not
Which I
going to track
appreciate.
you. We're going to do what we're allowed to do. Also, keep in mind that Google and Apple are frenemies in a way, right? Google pays an enormous amount of money every year to Apple for the privilege of providing the search back end to their apps. So, I presumably there's some, border crossing you can do if you're Apple and do some of that on your own. But I think Google's conditioned us to expect that, and Amazon for that matter.
They have. You're right. The ads, if they are targeted to you, are less annoying. But at the same time, it does make you wonder, like, wait a second, you were listening when I was having that conversation?
Okay, so a couple of things to talk about there that's interesting. If Apple is going to start to pivot more into advertising, it begs the question, and I've been saying this for a while, actually. Like, this is something I've believed in for a while, that this was never about Facebook's privacy issues. Facebook, by the way, doing pretty well up at 180 right now from lows at 154. This was never a question about, oh my goodness, Facebook is evil. Facebook is doing it. This was always a question of how can Apple use their infrastructure that they own end to end in order to enable a stronger route to the end consumer without the intermediaries getting all the upside. What do I mean by that? If you have a new app, for example, I have a startup, by the way, check it out, download it in the description. Please check it out. Give me feedback, give me thoughts. If I want to advertise the app on Facebook, I would be paying Facebook, let's say $1,000 a month to be able to drive more downloads, get more leads, get more customers, cost per acquisition, all that stuff. Or if Facebook's advertising sucks and their ad targeting sucks, I could just pay that to Apple and Apple could get that $1,000. The question is who's going to get that $1,000. Now, in Apple's mind, if they create the narrative that Facebook is this evil, dirty company at the end of the day, that essentially want, to just like take over your life or whatever, then that means that you would not want to use Facebook as a product, which means there's going to be less attention, which means there's going to be less demand for advertising. But if I go to the App Store and I can, find new apps, which is what Facebook is for the advertisers of the world, it's almost like a theoretical way to find new apps. It's like their own pseudo app store, but within a social media feed. Then I can just give Apple that money, and then Apple can take my $1,000 and give me the same result, and maybe even give me a better result, which means that at the end of the day, the targeting has to happen. Like someone has to target you to find your data. The question is which company gets the benefit off that. Apple has positioned Facebook and a lot of the other social media companies as doing this as fundamentally unethical, which was the iOS 14 update changes. If they're going to take that market and include ads in your maps, ads in your Apple Books, ads in your Apple News, ads in the Apple Store that are highly targeted, they're going to be very effective ads, but they're going to be doing it because they have a monopoly on your usage of the phone that creates the gateway for you to discover all of these products and experiences. So at the end of the day, that's ultimately how Apple plays this out. Now, this is a brilliant move by Apple at 172. I mean, this is the next growth curve for Apple. They are reaching peak maturity at their phones and laptops, and they need another S curve, which might be the car, but that's, it's going to be hard. The car is going to be really hard. Services is super easy. Services is like getting people to just buy their stuff and pay a subscription every month, whether it's Apple Pay, Apple Music, whatever, expanding more into Apple Podcasts, whatever it is. It's a pretty strong bet. So to me, the question then becomes, do you believe Cook is going to be able to out-Zuck Zuck? And if you do, Apple's more of a buy than Facebook. Now, granted, Facebook is massively undervalued for having 10 million advertisers, in my opinion. And so we have to see what happens. But Apple has, they've been able to do it. They've absolutely been able to do it. Definitely, Sam, avoid Zuck products. Facebook security is as bad as it can get. Happy to not use any of their apps. The crazy thing about Facebook is they have 440 million people using WhatsApp every month that they still have not monetized yet. So that's another growth curve that could exist for Facebook. Where do you want feedback for Audia? support@audia.io or amit@audia.io. Any of those emails are fine. Dude, gotta love your dedication working on a startup and still doing the morning streams. You're a beast. I appreciate you, Aurelio. I actually think I need to go harder. There's a part of me that wants to go even harder than I am right now, because I think I haven't even hit the trajectory for how hard I can go. I have a big meeting by this week, guys. By the way, on Wednesday. It's an incredible meeting. So I'm bringing back late night stock talks. It's going to happen every day, probably around 10 p.m. Today, I'll see you guys at 10 p.m. Or 10:15. I have the day I'm not going to be able to do it is Wednesday. Wednesday, I have a really big meeting, and I'll let you guys know and see how that plays out. Tesla's having a stock split this month. Yes, that is true. Tesla also is going to have a stock split this month. It's going to be under it's going to be $300, which is going to be pretty good psychologically for Tesla to be able to see $300. I was talking to my mom. She was like, "Oh, I'm going to buy it." I'm like, "Mom, that's probably not the best time to buy it." But that's the thing. Like, when you have your average retail investor who wants to buy something at $300, just like Google at 120, it's going to create an influx of more and more people still being able to do it, or still being able to try to buy or to want to buy more of these stocks. Okay, Inflation Reduction Act. We have to talk about that. Let's have a discussion on what that's doing for climate change, and ultimately what's that doing? What is that's going to be doing to reduce inflation? Now, make no mistake about it. They called it the Inflation Reduction Act, not because it's necessarily going to reduce inflation, but because the branding for them being able to pass that before the midterms for the Democrats is really good at the end of the day. All right.
Address the persistent criticism. This just does not come from the Republican side, but from a lot of economists, that there's just not a whole lot of inflation reduction in the Inflation Reduction Act, which is, to the extent that there is any, it's in later years, whereas the economy needs it now.
Well, with respect to healthcare costs, I think there will be an immediate benefit in the context of strengthening the Affordable Care Act and ensuring that the premium tax credit subsidies that enable healthcare to be affordable for more than 13 million Americans remain in place and don't subject it to the potential of dramatic increases in healthcare costs. That's an immediate benefit. Also, the seniors, of course, of this country will finally have an opportunity to have Medicare be able to negotiate prescription drug prices that are lower on their behalf using its bulk price purchasing power. That's a pretty common sense approach when tens of millions of Americans are on Medicare, but the law, as you know, had prohibited up until this point.
But the trouble with that is that the spending in the bill is upfront, and the deficit reduction, which is the thing that would be the most powerful when it comes to reducing inflation, is all in the back end, if I'm not mistaken, post 2025. Why isn't there more deficit reduction upfront, Congressman?
Well, the fact that the deficit has been reduced significantly during the first 18 months of the Biden administration. That's point number one. The additional $300 billion in deficit reduction that will take place over the window of the Inflation Reduction Act is also important. But the immediate relief that will be provided over the next few years in the context of healthcare costs is pretty significant for the people that I represent, who over the last decade have been largely concerned and complaining about the dramatic increases in healthcare that they've been experiencing. Now, of course, most recently, over the last year or so, we began to see gas prices increase. Thankfully, gas prices have also declined for the entirety of the summer, 7 consecutive weeks, every single day of this summer. And there's reason to believe, as you discussed earlier on this show, that will be sustainable moving forward. And what the Inflation Reduction Act is going to be able to do is ultimately drive down energy costs as well by incentivizing efficiency in the context of energy, both on the residential side and the commercial side, and by hopefully stemming the tide of extreme weather events that are incredibly costly for the economy and for the American people.
There's a Wall Street Journal editorial this morning that says this is all a big gift to China, in that China has all of the minerals that we need for electric vehicles and for batteries. Should we be doing more to onshore that production?
Well, that's certainly something that we can take a look at in the context of a broader approach in terms of industrial policy to bring jobs back to the United States of America. That was the centerpiece of the CHIPS and Science Act. We recognize that semiconductor production was heavily concentrated in the Far East, in Taiwan and China. That was a geopolitical problem, a strategic problem, as well as an economic problem. And so in the context of trying to figure out more broadly, how do we bring domestic manufacturing jobs and other jobs back to the United States and reverse the trend of them going in the other direction for decades, I think that's a good thing and a reasonable thing to explore.
Congressman, a bunch of your
So what he said there is a question of deglobalization to some extent, right? Now, there's a lot of things there. One of the reasons why I think deglobalization is important, or at least not important, but it's one of those things to really think about, is because a lot of the jobs that this new Inflation Reduction Act is trying to bring back to the United States, like chip jobs and manufacturing, those things have been outsourced for a reason. There was cheaper labor. So the reason we're having these conversations around deglobalization is because what it did is it offshored so many of the quote unquote dirty jobs in areas where, you know, people can make this iPhone and get paid 10 cents an hour and we buy it for $1,000, and Apple's profit margins are crazy, which delivers incredible value for shareholders. But at what cost of economies does that allow people to suffer? Like, imagine if Apple had to pay hundreds of thousands of people in the United States to build their iPhones. Yes, either the iPhones become more expensive to maintain the profit margins, or Apple has to reduce profits, which means shareholders get less value. But something's got to budge if we're going to actually keep jobs in the United States. If we're going to offshore those jobs, there's going to be more shareholder value, but I don't know if that's the best for our economy. So what he's talking about is that idea of deglobalization, along with a lot of the other factors that the Inflation Reduction Act will be able to do. Now, one of the things that's also important of the Inflation Reduction Act is the level of stuff they're putting into climate change. They're putting in a lot of subsidies. I think there's a lot of stuff for electric cars as well, which means if that is the case, then we should theoretically be seeing companies like Tesla benefiting from something like the Inflation Reduction Act. One could also argue that we don't know how it's inflation reducing if you're just putting money and printing more money. I think that's like $600 billion more dollars. Theoretically, you're printing that out of thin air, which should not be the best for inflation. I don't know. We're going to see what happens. But there are some targeted measures of the act that are probably pretty good. And there's a lot of negotiating to get it done. Now, no Republican voted for it. S&P, by the way, at 425, recovering a little bit from 424 in the pre-market. No Republican voted for it. This was broken by Kamala Harris, who's the VP for the Democrats. They were able to break the tie. So, you know, it's not something that's popular with the R's of the party, and the midterms are ultimately going to see how that happens. Now, gas prices are starting to go down as well. Gas prices I saw in New Jersey were about $3.99, which I haven't seen $3.99 in months. So if that's the case, OPEC is starting to produce more. The Saudis have said they're going to start to produce more. So that meeting with Biden and the Prince of Saudi Arabia, it was a good meeting at the end of the day because it led to more gas production. Now, if that production is going to lead to even lower prices, we are going to see, but things are starting to go down, which is, you know, rather a good thing. The question is, how do consumers feel about it before the midterms election? Quarantine Quartet, thank you for being here as well. Last video, we are going to see our markets are misunderstanding the Fed's inflation response. This is the former New York Fed president. Very curious to see how he thinks the markets are reacting in a strong way. Obviously, the markets are reacting positively to the Fed's inflation response, but is that necessarily the best thing going forward?
All right. Before I get to your calls about what the Fed needs to do here, let me just ask you this. Has the Fed lost the thread here in that we have people coming on and saying, well, now after the Fed's pivot, inflation is still 8.5%, and the market is pricing in cuts. You have one Fed official after another coming on and saying, we're going to stay tight for a while here. Is the Fed lost the narrative here, Bill?
Well, I think the market's misunderstanding what the Fed is up to. Markets taking the notion that they're going to slow down the rate of tightening to imply that the peak in rates is going to be lower and the Fed's going to cut rates in 2023. I think the Fed's going to be higher for longer than what market participants understand at this point. And I think basically people misread the last Powell press conference. They took the notion that we might not get 75 basis points in September as implying that the Federal Reserve is almost done. I don't think the Federal Reserve is almost done. They know that they have to do quite a bit more to push the unemployment rate up.
So again, his argument is that 75 is probably not going away and that a lot more needs to be done from an interest rate perspective to actually get, inflation to go down. Just because it went down from 9.1 to 8.5, we still have 8.5%, and that needs to go down.
To generate additional slack in the U.S. economy. And if you look at underlying inflation measures like the trimmed CPI, trimmed PC deflator, and the median CPI, those underlying inflation measures are running in the 4 to 6% range. So there's a lot of work to do. Even if energy prices come off and bring down the headline rate of inflation, the Fed's got a lot more to do.
Bill, why don't you give us your idea of how much more the Federal Reserve has to do? We have Fed officials, I think Jim Bullard is talking about going to 4.4. Even Charlie Evans, these are people you have worked with for many years, is talking about 3.75 to 4%. Is that sort of the range where you think the Fed needs to go, or do you think it needs to go higher?
Well, I think it depends on how financial markets react to the Federal Reserve's tightening. As Powell said, the economy runs on financial conditions, not just short-term interest rates. So if the markets are buoyant, then the Federal Reserve has to do more. I think 4% plus is the minimum that I'm expecting. I think the other thing that's important to recognize here is the Fed's not going to ease off anytime soon, because they need to be confident that they're actually getting inflation back down to 2%. The mistake of the 1970s was not that Chairman Burns didn't tighten monetary policy. He did tighten monetary policy, and he actually generated a couple of recessions, but he didn't stay tight enough for long enough. And so inflation got embedded, inflation expectations rose, and then that's what required Paul Volcker to come in and really put the economy through the ringer. And Chair Powell doesn't want to do that. So they want to be highly confident that they've solved the problem of inflation before they relent.
But Bill, the Fed is not winning that argument. When you look at the rate outlook as priced in the futures market, guys, if you have that Fed rate outlook chart, I don't know if you got it done, but the end of next year, the market is pricing in rate cuts, which tells you that, and I started thinking about this, the Fed's message is not symmetric. It said, we're not even thinking about tightening, but it hasn't said we're not thinking about loosening. So the Fed has been, on the one hand, very strong about easing policy, but not that strong about staying tight. And I also think, Bill, when the market has it wrong, it's sort of the Fed's fault. The Fed has to be responsible for that. What's your view on that?
Well, I think the problem here is that the market doesn't believe Powell when he says he wants to get inflation back down to 2%. They think basically if inflation is 3%, middle of next year, and the economy is soft, the Fed will relent. I think that's the key question. I believe that Powell means what he says, but it's going to take time for the market to understand that.
Bill, one of the challenges, I'm sure, for Fed officials in trying to convey this message is that if we go back 1 year and see what Fed officials were sincerely saying about how rates were likely to stay lower for longer, maybe we'll have one hike this year. I mean, conditions change, and the market might just be reacting to the anticipation.
All right, we're going to stop that there because I do have some breaking news. But ultimately, the point of that video was that people are misinterpreting what the Fed is doing, and the market is rallying off the fact that, oh, things are just going to go back to the moon, where that might not happen because the Fed has a lot of work to do. All right, last thing I want to show you guys today. I bet I'm about to break some news that you guys have not heard about this morning. Who remembers Adam Neumann from WeWork? Who remembers Adam Neumann from WeWork? The guy who basically blew up a $47 billion enterprise and kind of, just smoked weed on private jets and totally threw it into flames. Well, he started a new company, and Andreessen Horowitz, one of the most popular venture capital firms, just gave him $350 million for a new company called Flow. My camera just died. Give me 1 second. Let me turn on my camera. But oh my goodness, that is something. Okay, here we go. Ready? So Adam Neumann raises $350 million from Andreessen Horowitz for his apartment company now named Flow. Flow is expected to launch in 2023. So it is valued at $1 billion pre-seed. What that means for people who don't understand is pre-seed is a company that hasn't launched anything yet. So imagine you created a product and you didn't it's just an idea in your head, and you went to venture capitalists and you're like, hey, can I have money for this idea? And they have to value your idea. And they're like, yeah, we'll value it at $1 billion. We'll give you $350 million. Go make the idea real. That's what's going on right now. it's a little crazy. Newman is planning to make a sizable investment in Flow in the form of cash and real estate assets. It's often underappreciated that the only one person has fundamentally redesigned the office experience and led a paradigm-changing global company in the process. Adam Andreessen wrote, meaning he's betting on Adam's approach to changing the office infrastructure that was WeWork to do the same for real estate. Newman has purchased more than 3,000 apartment units in Miami, Atlanta, and Nashville. His aim is to rethink the housing rental market by creating a branded product with consistent service and community features. To me, this sounds like We Live. For anyone who saw the WeWork documentary, they were trying to create like a co-housing opportunity, and they pivoted into co-working, which was their big moneymaker that ended up collapsing. But co-housing was something they thought, community-based housing. Adam Newman grew up in the communes of Israel. And so the idea of like community living was always something that was interesting to him for a long time. Andreessen said in a blog post he was interested in Flow because the rental real estate market is ripe for disruption. He says you can pay rent for decades and still own zero equity, nothing. He added, in a world where limiting access to home ownership continues to be driving force behind inequality and anxiety, giving renters a sense of security, community, and genuine ownership has transformative power in our society. So they just got $350 million for an idea. Well, I guess we'll see what happens. This is the cool thing about America, though. You know, people can give you crazy ideas. People can give you money to go execute on crazy ideas, and those ideas could be crap. But it is interesting. Now, it's a very contrarian betting on Adam Newman. It's actually very, you know, I think this is why he got the investment, because everyone has counted him out because of WeWork being basically a failure from, you know, most objective lens, even though it did transform the world. Now it's like, what if we bet on the guy and see if he comes back with a banger? What if we see? But then you have something like Sam who says, so you're saying they're valuing another negative gross margin shit from fraud man sociopath to $350 million. No, they're valuing it at $1 billion. They're giving him $350 million. That's the crazy thing that's going on right now. That's the crazy. I might even do a video on this because this is a very interesting topic. Okay, couple things before I leave. Number one, please check out the app in the description. It is my new startup. I would deeply, deeply appreciate it if everyone downloads that, gives me some thoughts on it, signs up for it. It's at audia.io/register. We are trying to actually change the world, not in what Newman is doing. We are trying to create a world in which audio creators can get better discovered for their content. Number two, I have a Cathie Wood video coming out today about a recession. 3, I have an interview with a data analyst who didn't work at Palantir, but knows a lot about Palantir. That interview will be coming out today. And 4th, I have a video coming out today saying why I'm not selling Palantir. So a lot of different stuff coming out today. Please make sure to stay tuned for the channel. Around 10 o'clock or 10:15, I will go live for late night stock talks. We will talk more about this Adam Newman situation in that late night stock talks hour-long discussion, because this is something that it was just breaking news a couple of minutes ago, and I'm really, really interested to see what's happening. How could they give that guy funding, but we are out here funding a bit? Clearly, they don't necessarily know better. Well, it's not about what you know. It's about who you know when it comes down to funding. So that's what it is. All right. Thank you guys so much for listening and watching. I appreciate everyone being here. I will see you guys later tonight around 10:15. A lot of videos coming out today throughout the channel, so please make sure to keep up with those. And I will see you guys later. Thank you so much. Bye-bye, everybody. Have a great day and have a great week.